being in this business?
Pardon, could you...
The agrochemical segment of their activity is in some countries very controversial. They have a lot of issues with the general public. Did you properly assess the risk of being in this business? GMOs, the neonicotinoid that affects bees and things like that?
Of course, we take into account this risk. For example, we include in our model some projections concerning strengthening regulations, especially for our Covestro division, which operates in plastics and other different things, and also for agrochemicals. For example, in European Union there is a REACH agreement which contained three different stages where some substances were prohibited to use. That's why in 2018 there will be the next stage for some substances, and they will be excluded from this list, so that some of these substances might be used by Bayer. For example, in United States there is an act which called TSCH, which preliminarily has the same meaning for our company.
What's mentioned here is that Bayer is a worldwide company, and some problems in some certain regions, such as Latam, in which the agrochemical sales dumped in 2014, for example. These problems are offset by the growth in the other regions, such as North America, Asia Pacific, and Europe. Thank you.
You spoke about the level of R&D and the increasing R&D that they're spending at the moment. How does that compare to the level of R&D being spent by their peers and competitors?
So in terms of R&D spending, other companies, some of the pharmaceutical companies which are included in big pharma, so if they concentrate only on the pharmaceutical industry, they have higher R&D expenditures. Because we have to account for other segments where Bayer operates, such as crop science and Covestro. So their R&D expenditures are a little bit lower than in the pharmaceutical industry. So if taken into account only the pharmaceutical part of Bayer's business, the R&D expenditures level is at 11%. Their peers, such as Novartis, AstraZeneca, Pfizer, they have a little bit higher R&D expenditures, so it's from 13 to 15% of their revenues.
How do they measure success with regards to the R&D, return on equity? That's the first question. And then linking on to your free cash flow forecast, after 2020, you've got a pipeline. How do you determine which one's going to be successful, which one's going to be a failure, and how does it feed into your model?
So at first, if to account for how do they determine whether R&D are efficient or not, we have to look at the expense of the R&D and then the cash flows which new drugs are creating. So for example, when we accounted for the pipeline, and I may explain it to you on the example of finerenone, which is one of the drugs which is currently under development. So we accounted for the epidemiology of people who will be treated with this drug. Then we also took the projections of WHO in terms of the growth of people who will have this disease in the future. Then we took the expected market penetration of a drug, which the reports are provided by the doctors who have read the reports from their phases, the results of their phases, and so they make projections whether this drug will be successful or not. Then we take their peers, drug peers, and we see their pricing policy as well. So we assume that they will be priced somewhere around that price as well, and we then multiply and project our sales for the future drugs.
Also, by evaluating drugs in pipeline, we consider it an approval stages of medicine that are being under development. We considered some success rates of passing through each phase of clinical trials. For example, in the United States, there are 3 phases before the drug can be launched on the market, and this is also reflected in our model.
My question was tied to Covestra. You indicated that they spun out part of the company. Did you do any analysis on how it would affect the company if they completely removed that segment of the company? And tied to that question is, what other M&A potential did you include down the line?
Answering the first question about influencing the valuation, moving Covestro from the Bayer Group. Now Bayer Group owns 69% of total stock of Covestro, and this includes 69% of equity value to the overall equity value of Bayer Group. So if the company does not have Covestro, then the cash flows from Covestro will be also not included to the Bayer Group cash flows, and the equity value will be lower then.
Answering your second question, we would like to tell you that Bayer is currently seeking M&A in animal health area, because Bayer's animal health division contributed approximately 1.5 billion euros in 2015, and the future CEO of Bayer Group told that he will seek for possible M&As, otherwise he will divest this division. Thank you.
In terms of your valuation, you're looking at a 12% upside. What is the volatility of, the stock price performance? It could be because, you might actually reach it not because of the company, but because of market volatility. That's the first one. And second one is your risk-free rate at 1.5%. Is that a fair assumption, or is it too generous?
Answering your first question about the volatility, actually Bayer Group stock showed quite high volatility for the last 52 weeks. It was floating in the range from 95 euros up to 145 euros. This leaves room for potential upside of our model.
In terms of risk-free rate, it is 1.5%, and it is based on the German 30-year government bond. We used these bonds because the company is situated in Leverkusen, Germany, so this risk-free rate and this percentage is the best proxy for potential investors to lower their risks in terms of, and it is alternative cost of profit for potential investors in Germany. That is the major investors for Bayer Group.
One of Bayer's big agrochemicals competitors, Syngenta, recently accepted an offer to be acquired by a Chinese company. Did you compare your valuation of Bayer's agrochemical business to the one of this deal?
Actually, yes, it was taken into consideration. However, it was mentioning that Bayer market share won't suffer from such acquisition, and it was mentioning here that Monsanto, the company which wanted to merge with Syngenta, is currently seeking for possibility of merger or acquisition with the Bayer Crop Science or BASF Crop Science division. Thank you.
Given the company's international operations, what sort of foreign exchange exposure does it have, and how does it manage that?
So in terms of managing the foreign exchange, so at first we have to say that the company benefits from the current trends in this sphere, as the company benefits from the weakening euro, and also it manages its foreign exchange through the instruments that it has in the company.
Actually, our sensitivity analysis show that potential 1% depreciation of euro will actually increase our net sales by approximately 30 million euros. So this risk has a potential upside for Bayer.